I watched our portfolio value shoot up over $125,000 in April alone. And it was a nice comeback story after losing a couple $100,000 in March. I would love to tell you that I accomplished this feat by studying the market to make the perfect moves at the right time. But we're about transparency here. I bounced back by doing absolutely nothing. We simply held on to our quality holdings and continued to dollar cost average into the market based on our target allocations. In this video, we'll talk more about that, and we'll also get into the portfolios, value by holding, new transactions, dividends received in April, a HODL Factory update, and any future strategy adjustments. If you're new to the channel, welcome. My name's Jeff Teeples, and here we aim to grow your wealth with simple, time-tested solutions. Please thrash the like button, subscribe if you haven't already, and drop me a comment below if anything comes to mind. I'm still sponsor-free, but I've added a pinned comment with my Seeking Alpha Premium and Snowball Analytics links. I genuinely love and use both of them, and you'll see them in this video. You know what time it is. Let's grow. Practice what you preach. I had been watching investing videos on YouTube, along with devouring books, for many years before I decided to start this channel. I didn't think I had anything earth-shattering to bring to the table. But the one thing I had going for me was that I practiced what I preached for years on the topic. I do have an MBA, and I did work in the field for over a decade. I produced financial statements for companies and handled a variety of audits. I'm not doing random weird flexes here. The point is that I know a lot about this stuff, in painful detail because of my OCD and obsessive nature. Living within our means, sticking to our budget, ignoring the Jones and all the other things is never easy, but it's always simple. I'm here to tell you, but more importantly, to show you how sticking to a well thought out system is a surefire way for success in the long run. And I didn't want to share my personal finances on this channel. Some of you are ahead of where I'm at and others are behind, but it doesn't matter where you are. It's all about where you're heading. My mission here is simple. It's to help everyday people, like me, reach their version of financial freedom. I don't think anyone out there should have to work until you die, unless you genuinely love what you do. All this to say that we need to stick to our system when times get tough. It's easy to say when everything's going up and to the right without a hiccup. But will you stick to the boring dollar cost averaging plan and not tinker with your holdings when the portfolio drops by a significant amount? I hope so. Buying to your target allocations and never panic selling will make you wealthy. It's only a matter of time. It's almost impossible not to reach your finish line if you stay the course. Speaking of staying the course, let's get into this thing already. Portfolio overview. I like to start with the fact that all the spreadsheets that you see in these videos are out there and available for free for you to download, do a save as, and make it your own. Link in the description. We'll first get into all of my individual accounts, and then we'll bring everything together with a spreadsheet. Let's do it. We'll start out here on E-Trade like we usually do, my favorite online broker where I keep the majority of our assets. I have all brokerage and bank accounts selected, and this is my Roth IRA, traditional IRA, and taxable account. And then we also have my nephew's stuff down here, which we'll get to. This does not roll up into mine on Seeking Alpha. So starting at the top, you can see SCHD is our biggest holding out here in E-Trade with $385,000 of value, and that's 14,943 shares. And I should mention, my wife's is still not synced to this. She has 7 shares because, of course, I make it an even number overall. But I did finally get unlazy. I filled out the power of attorney. I had missed one little thing last time. So we got that notarized and sent off to E-Trade. They received it today, which I should note is May the 5th, Cinco de Mayo, and it's Monday at market close as I record. Next month it should be included in here. So I guess you have to trust me for one more month. But we'll check out the overall picture, including the wife's account, once we hop over to Seeking Alpha. Our second largest position is VGT, and you can see that it has a value right now of $281,850, and that's those same 500 shares at that same $246 per share that we've been holding for quite a while now. Our JEPQ position here in E-Trade, we have a lot more overall. My wife is heavy on this one in her Roth account, is at 1,623 shares. High average cost. We got in recently, a pretty bad time right before the dip, but our total returns look prettier than this because this does not include dividends here, and it's been yielding about 11%. But it's worth $83,535. And then the money market that we hold is VMFXX, which is a short-term Vanguard money market, is at $77,858. We also have our high-yield savings account in E-Trade. I think it gives us 4% right now. It's at $4,632. These will be combined in Seeking Alpha. We'll get there. And then my last position out here in E-Trade is IBIT for my Bitcoin exposure. I have 1,050 shares, a $36 per share average cost. Not too shabby. We're up nearly 50%. And it is valued at $56,311. And then these bottom two positions, this S&P 500 Schwab Fund and QQQM, are my nephew's. He's almost 18, so I'll kick him out of here soon. I wanted to help him get started investing. So you can ignore these two, and they will not be included in the aggregation of my accounts. The total value out in E-Trade right now is $893,382, which is really sad. Gives me a single tear because I think at one point we were above $1 million out here. We'll get it back. But now it's time to see the whole picture. So let's get over to Seeking Alpha. This is where I aggregate all of my portfolios. You can see here's the E-Trade we were just looking at, the wife's 401k and HSA, the HODL Factory from M1 Finance, my YouTube investing, and then some other cash that I hold outside of the money market. Just coming out here, I just want to touch the differences. You'll notice there's 7 more shares of SCHD. My wife's Roth IRA has 7 shares, and it will soon be under my vision in E-Trade once that power of attorney form is approved. And so the total that we have is $385,710. And VGT is the same. JEPQ is the biggest change. My wife has a lot out in her Roth. So when you add my E-Trade and her E-Trade together, we have 1,870 shares of JEPQ. Still at a high cost. We've recently got into this from QQQM as we approach retirement. And this is all in our Roths, so the non-qualified dividends don't matter. And it's worth $96,248. Now our money market out here, I use this holding for the high yield savings and the money market in E-Trade. They combine for $82,490. And we also have other cash that we'll get into later on the spreadsheet. And then IBIT's the same as it was. Those 1,050 shares are all under my E-Trade account. The wife's 401k is 100% VU. She has 822 shares worth a total of $425,735. I see some nice juicy Roth conversions post-career in my future. And you come out to the HSA and it's 100% in VUG. It's good for 94 shares at a total value of $36,368. And then the HODL Factory will open up later in Snowball Analytics to see all the details, but you can see that we are at $19,435. And I have a few things to say about this one, but we'll wait till later in the video. And then the cash equivalents that are not in E-Trade, some other diversified cash, mostly high yield savings accounts, is at $40,927. So our total portfolio after Monday, May 5th, is $1,425. Now, I will say the spreadsheet, as many know that have been viewing for a long time, is updated close of market as of Friday. So you will see a bigger number. I was out of town this weekend and I was unable to get it all done. Rest assured, it's the same portfolio, but the numbers have changed. We had ourselves a down day by $10,000. So let's hop over now. Now we're jumping out to my portfolio tracker, which again is available for free in Google Sheets or Excel form. Link in the description below. You can make it your own. It is currently my stuff, but it'll just give you a template to set up yours if you're interested in something simple like this. This is the tab I update once a week, and it spits all the information through to the other formulas. We just looked at this in Seeking Alpha, and you'll notice the value's higher. This is as of Friday. So there's the wife 401k, and we have all the E-Trade stuff, and it takes everything into here, and it rolls it in to a pivot table out on the allocations tab. So at a high level, with all of our accounts, 401ks, HSAs, taxables, doesn't matter where it is, this is our overall picture. So I have it by holding on the left. You can see VU, or the S&P 500, is nearly 30% of our portfolio at $428,000. SCHD was nearly $390,000 as of Friday. VGT is our biggest growth holding. We also have JEPQ as a growth holding, and VUG. And then we have our cash positions. They all roll into here at $123,000. There's the IBIT, and HODL I keep separate. So what really matters for our purchasing decisions, the target allocations I'm always harping on, is right over here. In a perfect world, I would keep my cornerstone, the S&P 500, my growth ETFs, and my value ETFs at the same value, about a third each relative to each other. And now it's not gonna be 33.3 because you also have this stuff, we'll get there. So really can't control the S&P 500, that gets those automatic contributions, but VU is the one I'm cool with running away anyway, so I don't really care what this one gets to. My purchasing decisions comes down to growth versus value. So right now growth made another run, and if I were to dollar cost average some money into my overall portfolio right now, in addition to the 401k and HSA and HODL Factory that we always do, I would put it into value, because SCHD, which is my only value holding, you can see this number matches this number, is underweight compared to all my growth holdings. And that's why I use these. I try to keep these balanced, and really I try to keep these two balanced. And then cash, with the market taking off a little again compared to the big crash in early April, is down to 8.6%. So really, let me back up the train. Any new contributions, including dividends from my other holdings, would go into cash until it gets up to 10%. I like to keep cash at 10% of my portfolio. You could do 5, you could do 15. It doesn't matter as long as you stay consistent, because that'll help you buy the auto dip. When the market crashes, this percentage will naturally go up, and you'll need to get it back down to 10% by feathering it into your main holdings. So right now we're cash poor, and I should note that my JEPQ within the Roths, I let drip into SCHD or JEPQ, whatever's lower here. But within my taxable account and my traditional IRA, I will be putting dividends into cash until this gets up to 10%. And then Bitcoin is just the IBIT. I want to keep this long term, I think between 2 and 3%. And yes, it's over that right now. I'm trying to figure out when and how to trim and take profits and trickle it into these. But I don't like to do anything with haste. I used to be 3 to 5%. I've changed a little on that. So I'll just chill for now. But ultimately, I'll take some long-term capital gains and ultimately sprinkle it back into, right now would be SCHD. And then the HODL Factory doesn't have a target. This is the YouTube money. You know what? Maybe we'll blow up someday, my friends, and this will be a bigger percentage. That would be great, but this is where all my excess YouTube money goes into. You know, I don't think we've visited the snapshots tab in a couple months. Let's just take a little look back at our last all-time high. It occurred on 12/6/2024. And as you can see, we dropped way down. At one point, we were down, and you can't see this, is off the screen, $281,000 from here to here. And now we're up over 100K recently here in mostly April. I will say there was a car purchase, a family car, and a big Roth conversion bill. So about 60K of this was cash going poop, but over 200,000 of it, it was losses, my friends. It was losses. But we stay the course, we keep buying to the target allocations, and we don't panic. And speaking of not panicking, let's see what that does for us over the years. We can see we start here in 2022, but lately I've been comparing the purple bar 2025 to the green bar 2024. So looking at April, we do have one entry for May that I just did on Friday, but this video is mostly about April, and we did get a little ahead of last April. So with all the highs and lows and craziness, here we are still up. Our average portfolio value in April updates was 1.355 million compared to 1.307. We're making progress when we zoom out. And even if we crash more and some crazy tariff stuff happens or the world keeps getting more wild, I'll still just stay the course. Not sell, accumulate shares. Eventually they hit all-time highs. If your shares only go up, you do the math. And last but not least, here is our projection. So based on today's date, not date of birth, but today, and a growth percentage of a nominal, not real, 8%, so this does not consider inflation. The market average is 10%, I use 8, so this is like a 5% real return. I do inflation in another module after this stuff. It looks like we have 8 years left until full retirement. That's 3 million plus. 4 years left until I drastically change the portfolio makeup to transition more into retirement. This is what we're looking at for estimated portfolio value in this amount of time. Will it change? Oh yeah. Time to find out if yours truly did in fact stay the course last month. Portfolio contributions. We'll first cover our automated investing that happens in the background no matter what. We max my wife's 401k and HSA every year. This happens evenly throughout the year as she gets paid. And I put most of my YouTube money into the HODL Factory out there on M1 Finance. This is $100 every week and it's automated as well. I do the rest of our investing manually, including all dividend reinvestments. Drip is turned off for this guy. Here's what I did in April. We're out on the transaction spreadsheet and you can see that we have 2025 April selected. April had 4 weeks that ultimately contributed $100 per week for a total of $400 to the HODL Factory. Just like I was saying earlier, that's the YouTube money that automatically feeds for my high yield savings within M1. JEPQ and SCHD got 24 and 20 shares respectively, and that was $1,154 into JEPQ and $519 into SCHD. This is reinvested dividends from JEPQ in the Roth. Some was invested in JEPQ, some was invested in SCHD, but this is all Roth related. The rest of my dividends from SCHD paid a big dividend that I ultimately got in early April, so it's in here. And my money markets and other things that produce dividends outside of the Roth, so non-JEPQ stuff, went directly into the money market because I'm cash poor. So again, I only reinvest dividends from the Roth no matter what. All other dividends did go into my cash, which isn't as fun, but you gotta do it. And I should note, you'll notice there's no VUG this month. My wife does auto contribute to her HSA, but in April, the VUG went into cash within the HSA to pay some medical related bills. The 401k, we did have a standard 2 contributions. It was exactly this divided by 2 per contribution. And again, this is including a juicy company match. So we were able to put in $2,833 into the 401k, into VU, which at an average cost of $492.02. Oh, and I should have mentioned up here, I'm all over the map today. The JEPQ average cost was $48.09 and the SCHD was $25.95. These are accurate. And then the average cost of this is just how much I put in. So you could ignore this. It went into my variety of individual stocks. On to everyone's favorite section. Dividends received. Dividends was an interesting topic in April. We fell well short of last April, but we had ourselves a timing issue. Let me show you what I'm talking about. All right, so we're out here on the dividend tracker and I have some explaining to do. You'll notice that in April of 2024, we received $2,319 of dividends compared to a measly $1,479.69. So at least that's nice. But what I'm saying here is I didn't sell the farm, I promise. What happened was some timing issues. So let's narrow in on April. You can see that our JEPQ got us almost $1,000 this year compared to $697 last year. So feeling and looking good there. Almost tripled our M1, our HODL Factory dividends. Okay. I was pretty cash heavy last year in the money market. Not only was it yielding over 5%, like 5.29% around this time, but I also had more in it. I was a little less diversified. You can see some here is in the HSA, but still a nice 543 last year compared to only 312. We figured it out. So last year, the S&P 500 fund from Boeing paid us in April. So that did not hit. This year is a blank. And then HSA again is like my new cash stuff that's you can kind of add to this in your head. This year we had it in March and last year we did not have it in March. So really what we need to do, because we received all quarterly dividends and monthly dividends times 2 in these 2 months, for apples to apples, we need the total of this against the total of this to see how we've been doing lately. And actually to do that, let's just go ahead and slice it. And you can see that we are at $8,467 $67 in 2025 over these 2 months with the same holdings paying dividends compared to $68.53. So when you look at it that way, we're still on the up and up here. And year to date, actually, let's just test that real quick. Let's look at year to date. Year to date, we have $11,465 this year compared to $91.40 last year. On to the wild ride. Portfolio performance. I can't wait to show you what took place last month in Snowball Analytics. It really was quite the ride. And really, you guys, Snowball Analytics has become my favorite portfolio tracking software by far and away. Seriously, give this thing a try if you're interested in tracking your portfolio performance. I really think you'll like it, and the link is right there in the pinned comment. Let's check it out. We're out here on Snowball Analytics, and I'm starting out on the dashboard here. And you'll note I have everything selected. I went over this last month, but a quick review. Everything is everything. I have a stocks and ETF category that we'll get in for the performance when we compare back to VU. And then I also separate out ETFs and stocks, so it's a little less messy when we're reviewing the data. And then I keep cash separate as well, so we can compare apples to apples. But starting here with everything, well, normally I prove this number exactly matches the spreadsheet, but it doesn't, because I'm recording here close of market on Monday once again. But here's our total value. I promise you it did match over the weekend. Total profit, the internal rate of return is all the way down to 13. It's just been brutal lately, guys. And our passive income, when you look at everything combined, including the money markets and HYSAs, you have a 2.8% dividend yield with a 7.2% dividend growth rate. Oh, and you can see right there, my estimate is pretty accurate. 39,936 annually. That's what this portfolio mix that we have would be expected to produce annually. So I was fairly close when I said that earlier. Now I'm out here on the growth tab, and we still have everything selected for an all time frame, and we want to actually pick stocks and ETFs only because we're comparing ourselves to VU, and we want to see what we really look like compared to the market. So you can't have cash in there. That doesn't make sense. Cash would technically help us this year. So we'll look at a couple here, looking at the stocks and ETFs performance year to date versus VU, the market. You can see we're the blue bar and the market's the orange bar. It is outperforming us. We are down 5.13% to the market being down 3.52%. So it's almost 2% ahead of us. But we're here to focus on April, and that's not any better. Darn it, why did I do that? You can see in April, we're down 1.83% to the market being down 0.79. So we did fall short of the market by about 1% in April as a whole. And you'll notice I did say we were ahead, we were up over 100,000. It was 126,000 and change. But last time I included those bad days, that big drop, just because I thought it was kind of fun to see what happened. And really you can see here, we went from negative 156.8K to negative 24K. So I guess I lied a little when I said we were up 125,000 in April because April had that big drop. But compared to my last portfolio update, which is what I go by, and these days happen to be in there last time, we are really up over 125K. And now coming down to this portfolio returns by month, I have 2025 selected. You can see in January we lost, February is about a tie, we slightly won in March, and we lost again in April by about that 1%. As you can see here, and so far it looks like we're down in May too. It's very early in May, but still, yikes. But I always like to look at this just to see how we're trending against the market. And then it's fun to view the culprits. So what I've done here, it's set to year to date. I'm about to change that. The performance by holding, and I selected just ETFs now, so this isn't so cluttered. We'll get into the HODL Factory. You can see that IBIT is our best performer on the year to date at positive 1.1%. JEPQ is number 2 at negative 2.5% total returns. And then VU, the market, comes in at negative 3.5. And the big culprit here is VGT. Tech has not been kind to us in 2025 at down 9.2%. And then SCHD is actually trailing the market now. Yikes, at negative 4.7. And then VIGIX, and this one's a day lagged, so technically it doesn't have today in it. It was down pretty big today, so was VGT, but it's at 4.9%. But we are here for April, ladies and gentlemen. And in April, you can see IBIT was up 11%. VUG is up 1.1. VGT is actually up slightly, 0.46%. JEPQ is up 0.28. So everything's beating the market, right? Yay, we win. Oh, wait. And SCHD, oh baby, down 7.4% in April alone. That energy crisis really came through. So the floor was looking good before that hit us square in the gut. But I'm telling you, buying opportunity. Okay, and we can't leave without doing a HODL Factory review. So we only have our individual stocks now. You can see here in April, we got thumped by the market. We were down 1.57% to the market's 0.68%. And we'll get into our individual holdings and some potential changes here in a minute. And just for fun, when we zoom this out to year to date, the HODL Factory is slightly outperforming the market. It's down 3.05% to the market's 3.29. And when we zoom it out the full just over 2 years now since inception, the HODL Factory is up nearly 10% to the market's 11.9. So we're still battling. We've had some issues, as you can see in here. We have some major issues, and we'll get into that here in a minute. And then from a monthly perspective, the HODL Factory crushed it in January, lost big in February, won in March, and lost in April. So we've been every other month hit or miss. And actually, we're keeping that trend alive because it looks like we're ahead so far, barely, in May. But now it's time to get some perspective. The HODL Factory is fairly high in energy. And as you can see here in April, by the holdings individual performance, HES and SM Energy were down 20 and 19% respectively. Devon Energy down 18%. EOG, that's energy, was down 12. The tariff news and some other things really punched energy in the gut. And when you take these away, which I do on some fun nerdy spreadsheets I run, the HODL Factory is doing so well as a whole, not only in April, but year to date. And we're still okay. We're still holding up overall. But Hutch and I have had some discussions. I've ran some screener and scoring updates, but mainly sector balance updates. I won't go into depth on this one. I think I'll release a HODL Factory specific video in the near future. But right now we cap every sector at 20%. That's okay, but then we get a lot of industry or subsector overlap. We have these companies and TPL, where's it right there, are all energy and the same industry as well. And we are making some changes. We also have like 3 home builders. There's some imbalance within our sectors. And when we do our second quarter update this year, there are going to be some major changes. Oh, and I nearly forgot. Usually I like to zoom this out a little as well. Looking just year to date, TPL is still our big dog. Again, energy. Visa and MasterCard are doing pretty well. KLAC, BMI doing pretty well. So a lot of our technology is diversified and performing solid, including Microsoft finally above 0 here. They had that huge earnings recently and popped up like 8% in one day. And then Hawkins, Hess Energy, I won't read them all off, but here's how they performed on the year to date. You can see energy, SM has just really hurt us. This one would not have made the HODL Factory mix with our new methodology and some discretion. And it's not one of those hindsight things where I'm trying to act smart as if it wouldn't have happened, but really it wouldn't have happened for a specific reason. So we've added a little more nuance to make sure that they're actually good, consistent producing companies, not just looking good on random lookbacks overall. Toll Brothers, building's been down a little, DHI, there's Devon Energy, but yeah, this is just the look on the year. And then I like to zoom it out overall too, because companies have come and gone from the HODL Factory, but a lot of these we've held for a long time. So you can see how they've produced. You know, Microsoft's just been hit or miss, but overall when we zoom it out, we're up 12%. TPL, it's had some major red bars. It's been this on certain months when we look back, but overall it's up 133%. That's kind of hard to argue with. MLI is doing good. Hawkins, I'm actually kind of surprised this materials company's done this well. Visa and MasterCard got off to really slow starts for us, but they have very high quality dividend growth metrics and they've both excelled recently. And yeah, just down the list. So we have more green than red and it's been brutal lately, but zoom it out and we're almost tied with the market, even with some mistakes that I have made. We are excited to get this thing going in the right direction. And before we pop out of here and get back to the video, I wanted to touch on the dividend stats. You see our yield is 1.28% with a 1.32% yield on cost. So it's a pretty low yield, just under VU, I believe. And this isn't a typo. Our dividend growth, which we focus on pretty heavily, is nearly 29%. And it's looking to pump out $247 of annual income. And I did want to pop over to the metrics tab, and I did go back to stocks and ETFs. We still do have a lower PE than VU, slightly, by about 1. And our volatility, our beta, is below 1, which is good. Less risk, as long as you have a higher risk-adjusted return, so you want the Sharpe ratio higher, and we are ahead of SPY and VU. So we have lower beta, higher risk-adjusted return, both via Sortino and Sharpe, and a lower PE. So I think we're positioned well. We're just a little heavy in energy, and instead of knee-jerk reacting and selling that energy to try to fix it overnight, I'm gonna wait for the quarterly update, because you never know if you'll get a little bounce back. You don't want to sell too low, but adjustments will be coming. I can't get enough of this stuff, and I can't wait to see what the rest of the year brings. Looking ahead. I'm considering making multiple Roth IRA conversions throughout the year instead of just the one big one at the end. If I take this path, I'll be doing my first conversion and paying my estimated taxes on it before June 15th in 2025. I have one more actual portfolio change that I'm considering sometime in 2025. I'm not ready to spill the beans yet, but how about a teaser? It would be a new ETF that I add to the mix. And I don't plan on selling any of my current holdings. This would be starting a new position that would take time to build based on my target allocations. So if it's a value company in addition to SCHD, or if it's a growth company in addition to VGT and JEPQ, I would add it instead of the pre-existing ones when I need value or growth. Thanks for watching this one, you guys, and I wish you nothing but the best in your portfolio. You got this. And check out one of these two videos if you wanted to continue down your path towards financial freedom. Remember, money is overrated. Freedom is not. Thanks for watching, and I will see you here in the next one. Peace.